I've now finished ICT's 2022 mentorship, and there's one question that I've seen come up more than any other. That is, how do you find your daily bias? In episode 40, Michael gives us 6 key points that should act as a framework for what we should be looking for. First, let's define what is a daily bias. It is where you expect price to go over the next few days or weeks. In this video, I'm going to show you my approach to how I find my daily bias, and it all starts off by asking 3 questions. Question number 1. Where has price most recently come from? I first will identify where the last major swing point was, and then I will look to see if that swing point has swept a swing high or a swing low. If the answer is yes, then I will use that swing point as where price has last come from. And then I will move on to the next step. Question number 2. Is there a liquidity pool or fair value gap nearby? So first I will see if there's a fair value gap nearby and I will mark it out. And then next I will find the next swing high or swing low and then I'll mark that out. If there is no fair value gap, then it normally means that price is just going straight to liquidity, and I will just mark out the nearest swing high or swing low. These will give you your draw on liquidity, and then you can anticipate where price will be going next. And then as a result, this becomes your daily bias. So every day that you come to the chart, you're waiting to see if you'll get a setup in the direction of that draw on liquidity. The final question, question number 3. Where would price have to go to invalidate your bias? So for example, let's say that we anticipate price to run to sell side liquidity or a fair value gap. Where would price have to go to invalidate your idea and prove that your bias is wrong? Now, if you're a beginner, I advise that you mark out this price level so that when you're watching price on a smaller time frame and you get a move in the opposite direction, you're not panicking thinking that your bias is wrong or that price has reversed on you. As long as price has not reached that price level that you've marked out, your bias is still true and you're still waiting for price to show you a setup in that direction. There are 3 things that you need to understand that are absolutely critical when it comes to daily bias. Firstly, just because you have a daily bias, it does not mean that you will get a setup in that direction, or it doesn't even mean price will even go in that direction at all. So let's say that you have a bearish daily bias. You will still see up candles even though your bias is bearish. As long as that price level that you've marked out is not traded to, then your bias is still valid. Do not expect that every single day price will move in your anticipated direction. Secondly, you will see setups that go against your daily bias. Now you have to learn to ignore these, and you also have to understand that you will not get a trade every single day, and it's okay not to be in every single setup. As a beginner, I think that you should be waiting for a setup that goes in the direction of your daily bias. Now this is because those setups will generally be more explosive and they will offer you a much better risk to reward. And lastly, if you cannot identify where price is most likely to head to next, then that's normally because price is either consolidating or price action is really messy. So in those scenarios, just move to a different pair and don't try to force it. Just wait until price breaks out of its consolidation and gives you a clearer picture as to where it's trying to go. Now I'll jump in the charts and I'll show you how I apply these steps in my everyday trading. Hey everyone, so I'm on the charts now, and this is a daily chart of the S&P 500. Now I'm using the replay tool just so that I can take you back through and show you an example of how I'd form my daily bias and how that would carry forward throughout my trading over time, right? So if we go to the first question that we need to ask ourselves, which is, where has price just come from? Where is the major swing high or swing low? So taking a look here, it's quite clear to see that we've had a swing low form, and then price now is starting to retrace back up. Okay, so overall we are bearish, but the last turning point is here. So what we do is we look left to see if it's taken liquidity. Well, we've got another major swing low here. And we can just draw that out as sell side liquidity. Okay, so we can see that price has dropped into sell side liquidity, and now we're starting to retrace back up. Okay, so what can we do from here? we ask ourselves the second question: where is the nearest fair value gap and where is the nearest swing high? So the nearest fair value gap is here. We've currently traded into it. Okay. And the nearest swing high, which would be buy side liquidity, is here. Okay, so now that we've got our buy side liquidity above price and we've got our fair value gap above price, my bias at this time would be bullish. The reason why my daily bias is bullish is because I'm anticipating that price will want to seek this fair value gap to rebalance it and potentially get up to buy side liquidity, because we've just come from sell side liquidity. So price coming from sell side will seek buy side, and price coming from buy side will seek sell side. Okay, so now we can move on to our third question. Where would price have to go to invalidate this idea and change my bias from bullish to bearish? Well, if you see that we've had a fair value gap from this candle's high to this candle's low, there's a fair value gap and price has retraced into it. Okay, if you look a little bit more left, we've got this down candle here before we got this up movement. Okay, so whenever you get an order block and then you got a fair value gap and they're right next to each other or they overlap, ICT says that this is really what makes an order block an actual order block. It makes it high probability. Okay, so keeping that in mind, my invalidation point would be underneath this candle's low. Now, there is no perfect way to choose these points, but that's not really that important as long as you choose a point and you stick to it. So the reason why I'm choosing this candle's low is because we're inside this larger order block. Okay, this is the last down candle in this move and it's below a fair value gap, right? So price can retrace down into it, but I don't want to see this low taken out, because if that happens, then my bias wouldn't be bullish anymore and I'd most likely switch to a bearish bias and start to target this low down here. Okay, but as you can see, price is retraced. So all throughout this down movement here, maybe I didn't get any setups, maybe I had to watch setup form that was going down that I just had to ignore, but it doesn't change my bias, which is bullish. Okay, now the reason why you need to have this level drawn on your chart if you're a beginner is because it helps you to have that perspective when you're looking on your 15-minute chart or your 5-minute chart. So for example, if I go down to a 15-minute and I'll zoom out. Okay, look at all this down movement, this strong bearish movement. Now, if you did not have your higher time frame bias and you didn't have this level down here, you could very much think that maybe we're reversing, maybe price is bearish now, and you can get yourself so confused. But because I have this line drawn here, I know that as long as we're above that price, then we are still bullish. Okay, if anything, price is just coming back down into a discount. Okay, we're coming back down into a discount. So if I see a setup that is bullish, I will be more willing to take it when price gets down here. When price is up here, it's in a premium. So you don't want to be taking those trades, or you want to take it with caution. Okay, so let's go back out to a daily time frame. So let's continue playing this out. Okay, so you can see that price these days here, and here, 4 days in a row, you've had all days where they've been bullish. Okay, so you may have got 4 setups, 1 on each day. You might have just got 2, you might have got 3, you might have got more than 4. Okay, but here, these days, your setup being bullish has played out quite well. So let's continue. We get another retracement, so price is going sideways. And then you get this very sharp down move. We clear out these relative equal lows, but look how price closes. Okay, so this might scare you if you didn't have your invalidation level here. This may scare you because you wouldn't know that price isn't actually reversing. Potentially it's just sweeping liquidity to go higher. So let's continue. And that's pretty much exactly what happens, right? So as soon as we get this, as soon as price clears the swing high like this here, now I'm moving my invalidation line. I'm moving it underneath this last down candle because again, order flow says that if this price was going to continue going higher, these down candles should not be violated. They should be respected until price gets to its target. Okay, so here is my invalidation line and I'm still bullish. My bias is bullish. Every day when I turn up to the charts, I'm looking for setups that are bullish. Okay, so let's continue. Okay, we filled in this imbalance, and now price retraced. Okay, gave us a retracement. We've got another fair value gap between this candle's low, this candle's high. Right, our invalidation line hasn't been traded through, so we are still bullish. And now price has started to go up above this fair value gap. So naturally, my eyes will go towards this fair value gap here. Okay, and if we can get past this fair value gap, this buy side liquidity will be my next target. So once we get this, I don't want to see price come below here. Okay, I want to see a nice run straight into buy side liquidity. If price comes down below this line here, then I'm going to expect a retracement. Okay, and my bias will turn to bearish. But let's continue. And that's it. We get to the buy side liquidity. Okay, so once we get to that buy side liquidity pool, I will be happy just to wait to see what price does next, because we could very much reverse, or if price does continue, my eyes would go to the next buy side liquidity pool, which in this case, you've got some relative equal highs here, and you've got a fair value gap. So if price doesn't take out, let me move this. So if price doesn't take out this last down candle and we continue higher, then my bias will remain bullish potentially, and I'll be targeting this buy side liquidity. Okay, and yeah, turns out we do actually get there. But as you can see, even though my bias has been bullish all the way from here to up here, there has been quite a few days where actually we've had some down candles, right? Price has retraced, and on those days you might just take a loss. You either take a loss or you'll have to look at setups that form that are being bearish, but because you're bullish, you have to ignore those. Okay, you have to have the discipline to ignore those and be patient to wait for your setups. Okay, so guys, that's the end of this video. I'm hoping that you use these 3 questions to help you identify what your daily bias is. Now, this is not the only way to come to a daily bias, but I think it might be a good starting point to see if you can incorporate this and if it helps you. So if you found this video helpful, then guys, hit that subscribe button, make sure you comment and like, and I'll see you all in the next video.